Hello fellow traders, welcome to another episode of the series. Thank you very much for your support. Today we will see the S&P 500, Standard & Poor's 500. It's a stock market index created in 1950s. The idea was not new. It's very important when you start trading or if you are already trading to understand the entity that you are trading. And what I mean by that, either it's a stock, commodity, binary, there always will be a different behavior to the prices, a pattern that will be easier for you to understand as you are into the market, as you are trading and you are learning more information about the market and about the market that you are going to go in. The more information you have, that I have already said that in my series, the better to go in this market, the market that you are more familiar. It's an index that most traders trade him. Why it's important to understand the behavior of each of these entities, and I will speak about the S&P 500. It's in our nature as human beings to proceed easier into a buy rather than a sell. Buying gives us the feeling of completeness, the feeling of fulfillment. Our entire economies are built based on this feeling. Somehow we are filling a void by just buying something. Historically, in the past, there was no way you could make a profit by shorting a stock. By default, when you were owning a title back then, it was considered a privilege. Economies and behaviors change a lot from the moment that we start to make profit on short positions in stocks and in the market. This created the need to a product that would guarantee the up, the long, the buy, the psychological success. The index was forged out of the 500 best companies, and that's how it's got his name. The 500 most powerful companies would guarantee a product that you could buy as it represents the strongest companies. The psychological need was covered. It's an index that shows how strong is the American economy. Of course, this is a fairy tale because everyone would agree that the American economy is not at its best. But this index is exactly what we need to be happy, to live our dream and buy. Now let's open it to real markets and see how this index behaves and how we can make profit out of it. Indeed, we can see it in live markets. It's a huge bullish. Here we have data from 2000, but I can guarantee that this is the reason that this index was created. We want something that will always go up. Of course, there are some major events like the mortgage crisis in 2008, the COVID crisis, and this you should pay attention. Of course, in trading you must be prepared for all these kind of situations. They are not very common, but a flash crash is always on site. So this is the reason that I've said many times, use your stop losses and do not risk your entire account. This is a very important. Risk a small proportion because I've said that many times. Trading is not so easy. For this example, for this trading, I will use Bollinger Bands. We have already analyzed them. In my personal preferences, I use the value of 35. By default is 20. I don't want to be so tight, so I will use 35. You can use bigger value. I would recommend 35. The deviation, I will use 2. I don't want to be very tight. And I always apply the prices in the typical prices. High-low closes divided by 3. This is also I have done and with my 2 moving averages. The most common one, the 100 and the 150. Now, why this thing is working, it's very simple. I have said that in all my tutorials. When the market is trending, all indicators works and everything is going fine. The problem is what happened when we have a crash. This is the problem, and what's happening with our position. That's how you always protect our position with stop losses. Now let's move to 15 minutes chart. Now today we had non-farm payrolls, so this the good news pumped the market a bit. See how in this example of the 15 minutes that it was able to generate too many trades. Now the problem comes with the stop loss. Okay, we know that it will go up. We don't know how much up. We don't know when it will spike up. Bollinger Bands will help you to understand the change in momentum, which signifies the change in the market. So in this case, I would suggest, that's why I have opened it here. I have a demo, even though I always trade in live markets, using the 0.01. Of course, we'll do a buy. Now you need to check how much you are willing to lose based on what you want to lose. Now see how if we hit a stop loss below here, we have already risked almost our 0.7% of our account. We are close to 1%. If we are trading with a 10,000 account, and that's why it's very important. When you are having a huge account, a big account, then it's okay. But you also must expect, do not expect so much profit, because leverage is on the spot. If I use a significantly bigger order, I will get in a risk higher amount of my entire account, and this is the problem. Because in this series we are debunking techniques and strategies, and it's very funny because I'm not showing you a strategy or a technique. I'm showing you how to trade, and this is a very different, how to make your own technique and your own strategy. It's not the safest way, but it's let's say a way that it most probably can guarantee some profits, as long as you're not over play with the leverage. Now, the ideal is to trade without any leverage, or if you use any leverage, multiplied by 2, by 5. These are the ideal numbers that you can play with. But you have to pay attention, because there are many commissions. Everyone knows that. So they will charge you for giving you that leverage, probably daily, overnight. To people who are already trading, I am sure that they understand what I'm saying. So the best way that you can start trading this index, if you are having a small account that you are willing to risk. So let's say that you are willing to risk your 100 USD account, because we are talking about these values. You can try first in a demo. When the prices significantly hits the down channel and crosses, of course, your moving averages, it's a buy signal. Now the problem comes here, where to exit the trade. You will exit the trade when you will get a guarantee amount of your account. Let's say that you are risking 1%. So at this point you will risk 1 to 5. When you are getting a 5% back, it's time to leave the trade and go to the next one. The stop loss will be the 1% of your account. This is very dangerous, because in this platform I'm already using a leverage. But if you do that without leverage, you won't have an issue. Or unless, I have said that many times, if you have infinite money, then yes, you will be profitable. Now, you see that I did a small buy of 0.01 and I'm already profitable. There is the catch here, because I'm already playing with leverage. So don't get excited. It's not so simple and so easy. That's why I choose the S&P 500 to show you that if you do that in this index, you will have a problem with the leverage. This will be your biggest problem, and the fees that someone will charge you for give you this kind of leverage. So, as I have said many times, pay attention. I use the indicators, even though I don't use any indicators in my trading. I have said that many times. For this particular index, it's very helpful to use indicators. The reason behind it is because, as you can see optically, they are working. Of course they are working, and we have said the reason that they are working. In the 4-hour chart, in the 1-hour chart, the reason that they are working is because the issue with indicators is that we are in an uptrend. Now, there are some problematic situations when the prices will leave significantly, as you don't have the stop loss, you don't have any previous price. You are just hoping that the prices will go up, and this is the catch up. Now, if you start a small account, let's say 100 USD, and you open a long position, many times you almost see your entire account to be entirely on the air, and this is where it's going to be the problem. So you will lose your entire profits, and because there is no guarantee stop loss, okay, you will follow the Bollinger Bands, or you will use the envelopes, or you will use another indicator of your preference. Traders and people that are already trading, I'm understanding what I'm saying, but I'm referring to the new people out there. There are also many byproducts from this index that you can buy, and you don't have to use the leverage. You will have a small earnings, but they will be guaranteed. And why they would be guaranteed? Because you don't have the leverage. Now, do not expect too much. From the beginning of this year, let's say, you would have probably a 20, maybe 30%. And this amount is huge. I mean, trust me. You see that if you keep your money in the bank, they will lose value every day. And this is probably one of the main reasons that we see the markets rising. Of course, there is also one important factor when we are facing this index. At this period that we are talking, we don't have any interest rates that will go higher. Of course, we don't have the inflation data higher, so the Fed most likely will increase the interest rates. This will slam the index. And why? Because when a company pays more for her money, for her lending money, I mean, the value of her money is higher, then she will have less profits. Not actually less profits. The profits will remain the same, and the data will be become normal. Because when you have higher inflation, you have higher gross profit in your company. And this is not so advanced economics that I am referring now, but it's, let's say that it's a little bit above average. When you're expecting the interest to go higher, the index will tend to fall. And the reason is because the companies won't be able to show so much profits as they were showing, because the cost of money is higher. And this is the only catch-up with the index. And also, the major events that you don't know where are the major events. The best way and the safest way, trade a 1 to 6, a 1 to 5, this is up to you, of your account, and pay attention to the Bollinger Bands. Even though I do not trade with indexes, I do not trade with indicators. I have said that many times. We will analyze. The reason that we are making this episode and this series is how to become creative, how to start making your own strategy and starting to make profit. And I can guarantee this is not very easy. It's not easy at all. Imagine that we have a 95% of losers. There must be something in common that you need to avoid. And this is the problem. Now, that's why I hit a buy. But you see that I already, my speculations were bad and I'm already at the minus. Let's go to 15 minutes to see what will happen. Of course, I won't keep the video for the entire duration. I'm expecting the prices to hit my lower mark. And remember that I'm already risking almost my 0.8%. Now, if I average my position and do another buy at this point, you understand that you will start to having problems. So, hit the buy when it's in the lower part of the Bollinger Bands. Again, this is not a guarantee profit technique. You won't see any of that in this channel. But because of this S&P is created with the way it is created, it's much easier to make a buy than to make a sell. Now, of course, the prices were pumped significantly today because we have the non-farm payrolls. The news were good, the index went higher. This is normal. There is a small pullback, retracement, and this is normal. We are expecting that. But when you are risking more than of 1% of your account, then you will start having problems. Again, if you want guarantee profits, I mean, no one can guarantee profits in the market. I mean, come on, you are manipulating your risks here. You can buy a byproduct of this index without any leverage. This would be very useful for you because in the long term, you will be profitable. I can guarantee that. In the long term, you could be profitable as long as you don't have the leverage. I have already given explanations about the leverage in this series. If you are so newbies in trading and you don't even know what is leverage, of course, you cannot start trading the S&P. You need to check many tutorials and make many tests. Again, thank you very much. I hope you like the video. Trade safe, and I hope I'll see you in the future.